Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep up with our analysis of the gold market. So here the situation is significantly more interesting rather than the euro currency, where just everything stands flat without any action. Here we have at least some dynamic. So it's in the intraday charts and daily chart as well. So here's a major thing that we actually mentioned recently, but today we have the confirmed setup. So here we've got the bullish grabber we discussed recently, so you can see the lows stand 1792, MACD line 1794. So here's was definite testing of the line, and it calls as a bullish grabber. It suggests the move at least back to the previous top, but potentially, since gold stands right in the 30% supports, minimum support area, nearest support area, and intraday price action looks like the ABCD, takes the shape of the ABCD, it seems that it should be treated as a retracement, because that's not definitely the way how market usually turns down and starts dropping. It should happen faster and with a stronger action. So here it is too gradual to call it as the starting of the downside collapse. And it seems that before possible retracement, market could form some pattern. Maybe it will be just return back to the previous top without any attempt to go higher. Maybe it will be more significant ABCD action that we will get some guardrails cheaper to sell or something of that sort. We do not know. But currently, until this pattern is valid, it would be better to not consider any new short positions. It would be better to treat the minimum target just following the conservative approach. It's around for previous tops around 1825, 1830. That's the first level that we should focus on. On the 4 time frame chart, that potentially the pattern that might be formed, if it indeed will be a kind of the ABCD pattern with the OP around 1875. Also, we could get the COP, as I said, slightly above this top. It's approximately around 1840, 1845 maybe. It's right here. This will be the COP. Actually, reaching the COP will be quite enough to complete the daily grabber. So that is the target probably that we should consider first. Recent action was mostly according with our expectations, with just one minor detail that looks a bit, well, not very pleasant. So if you'll take a look at the intraday charts, first of all, that we have to say around this pattern. So take a look, head and shoulders has been formed. ABCD pattern starts to form, but it has not been completed perfectly. So market hasn't reached the OP, showing bounce up again and return back above the neckline. So neckline was just briefly touched and burst, but has not been broken. And market returns back up again. So from the head and shoulders point of view, this is not good, but this is relatively good for bullish context. On the hourly chart, that's the pattern that we were trading recently, it's ABCD. And yesterday we said that it would be better to place stop right above this area, because by the normal market mechanics, market has started dropping and reach the OP target. But our butterfly has worked here, and grabber that has been formed here has also worked nice, because market has shown the spike down, taking out of these lows, but it has not proceeded to 1618 extension. That could help to complete the OP, but it was just 127 extension. Currently, personally, guys, I am stop out because I have placed stop here. Decided to keep the position a bit longer. Yesterday it was going around this area, and I would say that maybe market will proceed lower. But today in the morning, as you can see, the jump up, market has formed bullish reversal swing. So in the current circumstances, well, I don't see any reasons to hold the bearish position, because you could see here some kind of the hand and shoulders is forming with the bullish reversal swing up, and it might be the starting point of the action with the grabber. This is the lows of the grabbers. So whether we should say that market is not able to complete the OP and whether market will not go lower. Well, I wouldn't call it for 100% probability, because theoretically target exists and market still could reverse the action and try to complete it. Besides, on the daily chart, we have the grabber, but it doesn't mean that we can't get another one here with this drop below the previous lows and return it back up. So this is also could happen, if not today, but in the beginning of the next week. So that's why currently there's two ways to act. Speaking about bearish positions, this choice is up to you. So if you still have it and you are not stopped out, so you could decide whether it makes sense to hold it. For taking the position, you could consider two ways. So first is the most conservative approach usually, and it suggests the perfect completion of all patterns and swings that should be completed. So for instance, you could sit on the hands and see whether the market will reach the OP target. So theoretically, this is possible, and in this case, you will get best entry opportunity. But for truth's sake, we need to tell that chances on that now looks not very significant. Besides, you can see here we have clear bullish divergence around the confluence support on the 4-hour time frame chart. So here's divergence, as you can see, and on the 4-hour time frame chart, market stands at the confluence support that hasn't broken it down. By the way, here it might be the example of the Jordan-Napoli oops pattern, when the confluence stands near the neckline, market's trying to break it, but confluence triggers the failure of the pattern. This also is possible. Alternatively, you could try to take position based on the pattern that's now is forming, with the stops either below the lows, if you rely on the grabber directly, or you could take more insurance with the stops below the A1780 because of the OP. So take a look, the OP stands 1785, and you just place the stop for some case that maybe if OP will be reached, the market starts reversal, you will not be washed out on this most unpleasant moment. So where actually you need to take the position, but you will be stopped out right in the moment where you need to enter. That's why maybe it makes sense to hide stops here. So that choice is up to you. Maybe these stops will be enough, just based on the grabber. It depends on whether the market will proceed to the OP. Currently, I do not see big signs that it should happen because of this type of action as well. So it's very choppy, has no direction, and slower than this leg. So chance to reach OP now looks not very significant. Well, that's, guys, a new environment on the gold. So let's consider and keep an eye on how it will develop. And make your choice, since you can see lots of options exist how you could deal currently with the gold market.